Hi, today's solution Cambridge IGCSE Accounting Paper 1 May-June 2022. Question number 1. Which task would be carried out by a bookkeeper? Given options are comparison of financial statement between years. Here the question is the task of a bookkeeper. Bookkeeper means entering all the financial transaction or recording the financial transaction. So the first option is not correct. Preparation of financial statement, provision for information for decision making. So the correct answer is question number option D is the correct answer. Question number 2. What is the accounting equation? Accounting equation is equal to assets is equal to liabilities plus capital. So the first option, assets is equal to capital minus liabilities. No. Assets is equal to liabilities minus capital. No. Assets minus liability is equal to capital. Assets is equal to liabilities plus capital. So capital is equal to assets minus liabilities. C is the correct answer. Question number 3. Sarah sold goods on credit to Zafar. How was this recorded in Sarah's ledgers? Sarah is the supplier. Zafar is the customer. Here they are given two options, general ledger, sales ledger. When selling goods on credit to Zafar, sales is always credit. What is the journal entry? Sales account is credit. Zafar account is debit. So here general ledger, credit sales account. The sales account is credit. Credit sales account. Sales account is credited. Then sales ledger, debit Zafar account. Debit is Zafar account. Credit is sales account. So option A is the correct answer. Question number 4. Omar sent a credit note to Miriam for goods returned. Omar is sending credit note. It means the supplier will issue the credit note to the customer when the customer send a debit note. Once the debit note accepted, supplier send the credit note. So what is the question? How would Miriam record this transaction? Here Miriam is the customer. Omar sent credit note means this is the sales return to Omar, while purchase return to Miriam. Purchase return. Purchase is always debited. Purchase return is always credited. So the purchase return to whom? Omar. So Omar account debit. Purchase return account credit. Correct answer is option C. Omar account will be debited. Purchase return is credit. Five. The discount column on the debit side. The discount column on the debit side of trade days cash book is 1300. The discount column on the credit side total 700. What is the question? The question is, how much discount did the trader receive? In the cash book, there are two discount we shows. Debit side, all the receipts we enter. Credit side, all the payments. So, when we receive the money, business gives the discount. That is discount allowed. While when the business do the payment, that time business receive the discount. So, the discount received will be on the credit side. So, here the credit side, how much is the discount received? 700. So, the correct answer is B. Question number 6. CAIE bought office equipment. He purchased office equipment from Meena and paid immediately by bank transfer. How should CAIE record this in his accounting records? He purchased a office equipment and paid by check. Bank transfer means did the payment by bank. So asset account increase will be debited. Office equipment account debtor. Then the payment will be credited. Here the payment done by bank. So bank account is credit. So the correct answer, here the options given, bank is debit, no. Bank debit, no. Meena account debit, no. Office equipment debit, bank is credit. Option D is the correct answer. 7. Jabari maintains a petty cash book using the imprest system. The imprest is restored at the end of each month. End of each month the imprest. What is imprest system? The petty cashier start the petty cash book with a fixed amount. So at the end of the year, business, they will restore the amount, how much they spend in that month. It means how much vouchers they received. So the options we can see, which amount restore imprest at the end of the month. The first option, the amount left in petty cash less total vouchers received. No, that is the balance carried out. It is not the restored amount. The amount left in petty cash plus total voucher. No, that is the full amount of imprest. Imprest amount less the total vouchers received. No. So the correct answer, the total vouchers received. How much vouchers received, that money deducted from the imprest amount. So at the end of the year, that amount will be restored. Question number 8. Which statement about trial balance is correct? First one, it assists locating arithmetical errors in the bookkeeping records. The first one is correct. Let's see the remaining. It is a proof that entries in the ledger account are free from error. It reveals all bookkeeping errors. It shows ledger account errors only. The perfect answer is option A. Question number 9. What is an example of a compensating error? What do you mean by compensating error? Compensating error means one error will be cancelled by another error. Here the options are, a payment for office equipment repairs was debited to the office equipment account. This is not compensating error. This is one error. They are entered to the office equipment account. A purchase of goods from C. Jones was credited to account of C. Jones. This is not compensating error. The sale of goods 65 to Aziz was entered in the books 56. This is transposition. The wages account was undercast, $100 undercast, and the rent account was overcast, 100. This is the compensating error. It means wages account $100 is less. The same time rent account by mistake $100 overcast. So which they are not entered in the wages account is compensated by this error 100. The correct answer is option D. Question number 10. After the preparation of Abdul's financial statements, two errors were discovered. The first one, the purchase of a machine by bank transfer 5,000 was omitted from the accounts. And second error, the purchase of a motor vehicle 15,000 was entered in the motor vehicle repair account. The first one completely omitted from the book. They are not entered in the book. The second one, motor vehicle entered in motor vehicle repair account. Asset account entered to the expense account. So what is the question? The question, what effect will correcting these errors have on the non-current assets and working capital? In the non-current asset, purchase of machine by bank transfer, that is 5,000 is there, 5,000, and purchase of motor vehicle 15,000. So after the correction of error, they omitted the purchase of machine. So when they corrected this plus 5,000, they have to add in non-current asset, and purchase of motor vehicle by mistake they entered in the motor vehicle repair account. Now when they are correcting the error, they will add motor vehicle 15,000. So total they add 20,000. So it will increase the non-current asset 20,000. Next, working capital. Working capital means current assets minus current liability. So the purchase of machine by bank transfer 5,000 was omitted. When purchasing the machine by bank transfer, the current asset bank will decrease. So when we are correcting this, it will decrease 5,000. The second error, it will not affect the working capital. So working capital minus 5,000. So increase 20,000 and decrease 5,000. Non-current asset, the first option increase, but increase 15,000 no, increase 15,000 no, no effect no. Option C is the perfect answer. Question number 11. Raj had a debit balance of 10,800 in the bank column of his cash book. He discovered that purchases 890 paid by check had been recorded 980. This is an error. The following appeared in the bank statement. They are given the bank statement but had not been entered in cash book. Bank charges, interest received, they are not entered in the cash book, and one error also there. What is the question? The question asks, what was the debit balance in the bank column of Raj's cash book after adjusting for these items? So here, what is the balance? The balance was, wrong balance is 10,800. Now he discovered that the purchase 890 paid by check had been recorded as 980. So actually they paid 890, but in the record they put 980. So what is the difference? 980 minus 890 is equal to 90 extra they deducted here. So we have to add it back. We added back this 90 and bank charges 76. 76 bank charges is an expense. It is not entered in the cash book. So we deduct it now. 76. Then interest received. Interest received is an income. This goes to the debit side. So 120 we will add. So the correct answer is 10,934. Answer D is the correct. Question number 12. Why is a sales ledger control account usually prepared by a different member of staff than the person who maintains sales ledger? Always the business will hire a different member to do the sales ledger control account. Why? To detect the fraud only. So which is the correct answer? One of the easy question. Correct answer is option A. 13. Tamil provided the following information for March, his first month of trading. They are given credit purchase return, total payment to credit supplier. During the month, Tamil overpaid a supplier, 94 overpaid also. He did not make any further purchases from this supplier in March. Any further purchase he didn't do. So this 94 is more he paid to the supplier. What were the balance on Tamil's purchase ledger control account on 1st April? Here they are given two options, debit balance, credit balance. Here the debit balance we know that is 94 is the debit balance. In the purchase control account, the overpaid, he has to get the amount back, 94. So option C and option D is 94. But what is the credit balance? Here the credit balance is 9,100 minus 3,322 minus 5,358, and we have to add back how much he overpaid. The overpaid amount is 94. So we should add it back. 94. So 9100 minus 322 minus 5358 plus 94 is equal to 3514. So the correct option D is the correct answer. Next, 14. The following payments were made by John when he purchased a machine. They are given the informations: purchase of machine, delivery charge, insurance, installation, prepaid. What is the question? How much should have been debited to the machinery account? That is the capital expenditure. How much? Here capital expenditure, purchase of machine is the part of capital expenditure. Delivery charge is the part of capital expenditure. But insurance is not the part of capital expenditure. Installation charge is the part of capital expenditure. Prepaid is not. So you have to add 10,000 plus 1,200 plus 900 plus 900. So the correct answer is $12,100. C is the correct answer. Next, question number 15. On 1st January, Zach entered the cost of repairing equipment 420 in the equipment account. This is the error. What will happen? Equipment will overstate 420. Now, on 31st December, depreciation of 20% depreciation per annum using straight line method was charged of the balance of equipment. What is the question? What was the overall effect on the book value of equipment on 31st December? Book value is equal to cost minus depreciation. Here the cost is added by mistake. The cost is added. How much the cost is added? Here the cost is added 420 extra. So plus 420, that is overstated. While depreciation, if the asset account 420 overstated, when the business calculate the depreciation, that also overstated in the depreciation, also overstated 20%. So 420 multiply 20%. What is the depreciation? The depreciation of 84 of this overstated as equipment account, that is deducted 84. Here cost overstated and depreciation also overstated. So the net effect 420 minus 84 is equal to 336 overstate. Actually it was overstated 420, but they deducted the depreciation also, the same mistake. So the net effect 336 overstated. Correct answer is option B.